Members who have not had an opportunity, we will reconvene for the remainder of the hearing for your questions after votes. At this time, we will ask Mr. Hill for his 5 minutes of questioning.
Thank you, Chairman Barr. Appreciate the time today. Very interesting panel. I was at the U.S. Chamber this morning talking about fintech and the advantages of exploring how blockchain can change business economics and accounting and logistics. Very interesting topic. Today we're talking about something that is the headline, which is constantly chatter about cryptocurrencies. And when I listen to your testimony, I just have flashbacks, not personally, of course, to the 1830s. I'm thinking about wildcat banking when we had no central bank, thanks to President Jackson's insistence that we didn't need that. And every state and every business and every town issued script or currency. I have a book at my house of obsolete script and currency that's a collector's guide, and it's very thick. So help me, Mr. Pollack, understand that why is this any different? I mean, I can't imagine that any one privately issued cryptocurrency could be any more accepted than another in a big picture sense. Why is it not like wildcat banking of the 1830s?
Congressman, I think it's exactly the same as I tried to suggest in my testimony. I said in my written testimony, I have in my collection, maybe my book isn't as fat as yours, a nice copy of a $3 bill issued by the Wisconsin Marine and Fire Insurance Company, which acted as a bank in the 1840s in this period you're talking about. I think it's exactly the same, except those currencies did have a claim on the assets of the bank if the bank had good assets.
Thank you for that. And Dr. Michel, you know, I think if I remember Article 1 right, coining money is an enumerated power of the Congress, not the Federal Reserve System. Yet I'm always, in fact, Chairman Powell got the question this morning, like Chairman Powell can decide to do cryptocurrencies at the Fed. Where is all this? This would still be pursuant, obviously, to Congress directing that we do this. And so tell me your views on that legally.
Legally, I mean, I hate to venture a guess because they seem to be able to do quite a bit without legislation.
This is no surprise from your testimony. Yes, thank you. And then Dr. Prasad, a question for you. You talked about potentially, because of blockchain, truly an innovative area, that potentially you'd make some forms of money or credit, I'd say, obsolete. Like in account payable receivables, for example, people wouldn't necessarily have as big a line of credit. So you're concerned about future credit creation and open market operations. I assume that's where you were coming from in your testimony.
That's part of it. If you think about the previous congressman's question about what is the point of cryptocurrencies, there are many inefficiencies that lurk in the financial system, including ones that result in crisis, but also if you think about payments, either using your Visa or if you think about cross-border settlement of transactions, those are painfully slow, sometimes quite expensive, and these technologies in principle provide a way of getting around those issues. They, in principle, again, I emphasize that, could make transactions much easier to verify, to follow through. They could ensure finality of settlement of transactions and bring down the cost. We're not quite there yet, but that's the prospect, and that could affect the traditional model of banking, especially as non-bank financial intermediaries. We talked about Alipay and Alibaba in China. They take over, and that could affect how the Fed thinks about financial stability and the transmission of monetary policy as well.
Thank you very much. In my time remaining, Mr. Chairman, since this is the Monetary Policy Committee, I have to commend to our viewing audience and to my colleagues Mr. Pollack's recent writings on the 40th anniversary of the Humphrey-Hawkins Act, one of my personal favorite laws. And we celebrated today quietly here as we had Chairman Powell testifying, and I always find the goals of Humphrey-Hawkins odd. You have full employment and price stability. So I didn't get to ask my question, and I'll let you have the last word, Mr. Pollack. How is price stability consistent with perpetual inflation? setting a 2%
Congressman,
inflation target.
It is not. That's one of the great mysteries of the Federal Reserve, how stable prices, which is actually the term in the act, is consistent with their announced strategy of perpetual inflation.
Thank you. That's one of the great mysteries of finance. I yield back.
The gentleman yields back from